What is going on, everybody, and welcome to another weekly update. What I like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. That sounds like something you're interested in. Consider subscribing, as I do also provide daily content or market pulse on X at Hemi137. So, as always, what I like to do is to jump into a weekly recap, kind of give my current landscape on what I believe is currently going on. Again, I don't like to project too far ahead. I like to try to keep things within the next couple weeks. As we all know, if you've been in the market at all, the market is very dynamic and it can change very quickly. So, with that being said, after I give the weekly recap, I start getting into some current events that are happening this week. And then we kind of started diving into some charts after that. So, again, we have a good mix of all things on this channel to try to get you the most prepared for the week ahead. So, with that being said, let's dive into this past week. Now, we are starting to get into some major earnings. And this week is kind of a Super Bowl week. What I've noticed this week, and that's something I've always talked about if you followed me at all, is I talk about a Super Bowl week in strategic planning of earnings and how they do that. And what we've seen over this past week is they've essentially pulled Tesla out of this week. Tesla hasn't been doing very hot. They essentially implanted it into Super Bowl week. They've also kind of diluted Super Bowl week and moved some of the other big earnings to next week. So they essentially split the Mag 7 between two different weeks just in case we get some bad news. So trying to get a mix of good and bad reporting on the same week, so it kind of dilutes itself. So it's not so bad when it's being reported. But now coming into or over the past week, what we've seen, or coming into this past week, we've seen some bank earnings, and we started this week off with the same type of scenario. And one theme that has been across all the banks is essentially that they've all beat, not by great means. Again, they've had sky high essentially expectations for the banks, because a lot of banks have been essentially gobbling up other banks because they're Big Ten industry leaders. And so they will tend to do that when when you're going through a banking crisis. So you get a lot more deposits. Big concern being with the banks, though, is that a lot of these deposits are dwindling down because people are burning through savings. And so that was a big concern. I know Jamie Dimon even brought this up the previous Friday when he was talking about the uncertainty of what's going on in the coming future. And as we get more into this, when we start talking about Powell, you'll see why. But ultimately, again, the consumer's in bad shape. People are working multiple jobs, and they still can't keep afloat, and people are getting frustrated and burnt out on the current environment. So much so, I believe we're getting very close to a point to where this whole thing's going to come to essentially a grinding halt. But again, that's the main theme, is the uncertainty in the banks ultimately. And again, when we start going more through these earnings, again, I just highlight a lot of the specific earnings that I'm particularly watching, but there are always tons of earnings going on during this particular week for sure, because earnings are always front loaded with industry leaders. And then you kind of get some of the hidden noise. Like this week is a good example of that, is that a lot of times they'll flood you with information on big weeks like this week and next week. We've already been kind of getting floods of information already to this point. So that's telling you that there's just so much information that they're kind of starting to let that bucket leak already, and then it will get a lot worse over the next coming weeks. So just keep that in mind. One of the bank's allies lost about 52% of its revenue due to loss of auto loans and delinquencies. People, again, these cars are very overpriced. You have to understand that because of the pandemic, there was a shortage on vehicles being made. And so this is why, not that long ago, we were seeing used vehicles essentially not lose any value and actually gain crazy value because of the essentially supply shortage. And then now we're starting to equal out, now that we're out of the whole pandemic thing. And then we're starting to essentially normalize pricing, and not only that, but the insurance rates right now and maintenance, because people are keeping their cars longer, is going through the roof. And so a lot of these people are getting these, $1,100 payments for vehicles, and these, especially these high end vehicles, are like $100,000, which is absolutely absurd for a vehicle. And people just can't afford it. And so now it's starting to really hit. And Ally, being a big auto loan bank, is getting hit badly because of that. And so, with that being said, I've talked about this before about the lots. They have. I think Toyota is the only one that only has about a 30-day supply. Toyota always typically does well in general because their cars last a long time. But with that being said, like every other major auto company is hurting really, really bad. And even Tesla's again a tech company in my opinion, but again they do sell EVs, and again at this point it's tied in with the auto industry, and again it's straight to consumer, and that's something you have to understand with Tesla. Like Tesla's going to get the grunt of it because of the fact that they are straight to consumer, where a lot of these other companies are not, and so there's a very delayed reaction there. This week we also got some chip news. They did beat, but they're again leading more towards automobiles. There's a big lack of demand for auto chips at this point because no one can afford to buy vehicles. Again, there's no excess money in the system because of the tightening that's currently going on. That people again are splurging. When you start splurging on Netflix and groceries, that is telling you something, that people are looking for cheap entertainment because they can't afford anything else at this moment, and they're already maxed out with their credit cards and their savings. Like they have to really be at this point you're pretty much in survival mode in hopes that things turn around soon. And I think we are getting to that point of where that pivot is not that far off. It's in the foreseeable future. Now, can they continue to push us out another year? They're going to try, because inflation is still high, so keep that in mind. And so with that being said, Netflix did beat, but they are removing subscriber count. And something I said, which was really beneficial with Netflix because of the subscriber count, and kind of give you an idea where the market was in general. And if there's a high subscriber count, that means the consumer's in a bad spot because people are looking for cheap entertainment. Now they're removing that from earnings. So yay for that. So this is what I talk about: a strategic placement and essentially manipulation of documents and stuff like that, because they're trying to hide or paint a narrative that is what they want essentially the public to see. So with that being said, the Mag 7 lost about 400 billion of market cap on Friday alone. It's pretty nasty, and that was led by Nvda. It lost about 100 points in itself in one day on Friday, as we are continuing to roll in. And Netflix or Nvda earnings, I got to look and see when that is, but we could actually look at it when we get into the charts. But I think it's still about over a month away. Again, they've kind of pushed that one out since it's led the Magnificent Seven, and they're trying to push that out to later on in about a month or so. So that way, you don't have a bunch of industry leaders all reporting, especially during a time like now, where things are really looking bad. So you're trying to, again, control the narrative, and you can't do that if you get slammed with tons of bad news. That's the thing you have to understand, is like to get a lot of downside sell pressure, if you have a bunch of cascading bad news, that can lead to that. And we saw that just about a year ago. We started getting a bunch of bad earnings, or maybe it was about 2 years ago in 2022, when tech bottomed, because our tech was crashing essentially because you had big earnings Super Bowl weeks, and they were all reporting, and they were all doing horribly bad, starting off with Apple, and then you had Amazon turning around doing bad in the same week, and it just took down the whole market. The market was gapping down overnight because of that. This is why they shift things around to try to prevent that. So if they give a little bit of time in between, kind of helps dilute the sell pressure and the worry. And so that's why, again, they shift them around and dilute them and not load too many one. Like this week, like at Tesla, we already know Tesla is doing bad. And so they kind of shift that with something like a Microsoft and a Meta that have been reporting really good, and to try to help dilute it so that it doesn't have tons of sell pressure to one side. And you have the best kind of both worlds at this point. So again, Mag 7 not doing too hot right now. We're kind of getting that sell pressure now as opposed to typically what we would have got in March. So it does shift around. You have to understand it kind of shifts around every year. It's not always the same. Again, they're trying to leave people on their toes because if you knew exactly what would happen, again, they're not trying to let people just win the market. That's not how it works. It's always, like I've said, it's always dynamic and it moves around. It's kind of around the general same time period, but again, it shifts around. So, and then we also had Fed Pal come out. I said lack of further progress on inflation. Inflation was introduced uncertainty and when to cuts. The Fed can maintain higher rates for longer as needed. So again, Powell is pretty much at the mindset that there's no need to cut, right? Because of all this pencil whipping, things are so strong and resilient that why should we need to cut? And something I brought up multiple times is that if the numbers are showing that things are so great, well, then we can just continue doing what we're doing, right? And people don't want to hear that, right? The average consumer does not want to hear that because they are struggling just to put food on the table and to have to travel for work and whatever XYZ to keep a roof over your head because insurance is going through the roof on their automobile and on their home. And a lot of people are having to move in with their parents. Adult children have to move in with their parents because, again, they can't live by themselves. And I've talked about that before, that there was data that came out that either one, they were living with a spouse, a roommate, a vast majority of people, I'd probably say it was roughly around 80-85%. There's a very small portion of people that are actually living by themselves because it's so expensive right now. And so again, a lot of this data is showing that. And again, you have earnings, which again, expectations are going to be very low. So you can't really expect that. You have to look at the grand scheme of things on what things are looking like to really get essentially a sense of what's really going on. And we've talked about this with Apple because Apple has had multiple bad quarters and it's continuing to get worse. The expectations are really low. So it's just pretty much just show up. And then if you beat that expectation, your stock skyrockets because they try to essentially gauge that expectation off the current sentiment of the market. And the market's been really bad. The market gets numb to bad news. And so it's adjust for that. And you have to understand that. So again, when these things beat expectations and explode up is because expectations are really low in the first place. So that being said, upcoming week, we do have the GDP data coming out for Q1 on Thursday that will hold some intraday weight. We'll see what happens there. Then we have the core PCE on Friday in the morning. Again, a lot of this data is going to give it, at this point, the market's already been selling off quite a bit. But again, I don't think you're going to get any major crash or anything like that unless all of a sudden you start getting the Fed cutting because they're worried and concerned about layoffs. And that is one thing we are seeing more and more this week. Essentially started out with Tesla laying off 15,000 people just randomly out of the blue. And then you also had a bunch of other companies. You also had the TV company Toshiba, I believe, was laying off a couple thousand people. And we're getting ready, not this week, but next week, we're getting ready to start reporting non-farms again, which again, you talk about pencil whipping. And yes, the big thing you have to understand is government jobs hold a big portion of that. I think it's like close to 25% of that. And a lot of these, what they quote unquote call ghost jobs, they don't really exist. But whatever they can do to prop up these numbers, these GDP numbers, because not only can you show weakness, is you are right in the middle of global tensions on top of everything, and a race for AI against China and Russia. And so with all that being said, and the dollar dominance right now, and essentially the U.S. trying to keep everybody still on the dollar while you have BRICS nations and everything else that are trying to trade off the dollar. And typically what happens from what history has shown us is that if you try to get off the dollar, the U.S. will correct you in doing so. So, but being said that you still have to understand the U.S. dollar, it's so intertwined with everything. People just can't get off of it, and it's just going to be it. It's just not the way it's going to work. Yeah, I understand the fiat and that currency is really only good for about 100 years. We're well over that at this point, but again, it just doesn't change overnight. The dollar isn't just going to plummet. It's just not the way the system's going to work, and it's not designed. Like, it's been surviving this way for so long that it takes a matter of time before everything starts rolling off. And so again, that's why cryptocurrency was created. The Bitcoin halving also happened this week. So congratulations for that. We'll see what happens in the next 6 months, as we'll see with the Bitcoin halving. That's when they really start getting their bull market, about 6 months after halving. So keep that in mind. This is why cryptocurrency was developed, because of the dollar, and understand that, okay, well, we've created a cryptocurrency, but people are more cash grabbing than trying to actually use it for what its use case was for. But now you got all these big corporations just gobbling up all the Bitcoin anyway. So essentially what it was originally intended for is not going to be that anymore, right? And so with all that being said, again, no, these events this week, I don't really see anything big happening with that. Next monetary policy won't be until next week. Again, not expecting any changes there. It's not saying news can't drop that can change that. That's very much essentially, the more we go into this year, you have to understand that's a very strong possibility. Any piece of data can change things on the fly. Especially when you are essentially cranking quantitative tightening, and this thing is, it's seizing up really bad because you haven't put oil in this thing in a long time, and it's about ready to explode. So again, you have to understand the current market and where it's sitting. And so with that being said, monetary policy, it's blackout period for the Fed. We've heard Fed talk like crazy over the past like 2-3 weeks. And they've essentially given us every scenario in the book that they can cut, they cannot cut, we can raise rates. Nobody knows what's going to happen. But all we do know is that we have to watch that lever, because when the rates move, the market's going to move with those rates. If it goes up, you're going to bring a lot of fear back into the market, and that can really start selling off the market. If we start cutting, depending on the scenario and depending on how quick those cuts start coming in, if those cuts start really coming in, you could start getting panic, and the market will say, okay, well, now we are in a recession, and the market can price in a recession. So again, those are things you have to keep in mind. So those are the different scenarios there. Core isn't until the 15th, so we still got some time before that. Upcoming earnings. Now, again, I don't lay out every earnings on here. These are only the important ones that I am watching. And again, you'll always get news, the layoffs and everything. I don't report all the layoffs because there's just so much layoffs that are currently going on. Actually, I think it was Code for Women was another big one this week, that they laid off like 400,000 people, which was crazy. And then you're going to look at something come May 1st, or the first week of the first Friday of every month typically is when they report non-farms, and you're going to see that we're still going to be doing exceptional. That unemployment is still way below, which again, revisions, the market doesn't make its move off of revisions. The market makes its move off of headline news. And so with that being said, upcoming earnings this week, we do have UPS. Again, great understanding of where the market pulse is. They have continued to do horribly bad over the past year, so much so they've actually laid off even more. I know FedEx itself laid off more people over this past week. That was another big headline news that came in that shows you that there is just no product being moved, which means the consumer is in a bad spot. So Tuesday morning, UPS will give us some more insight into that and where shipments are going. That will be really good for market pulse. You'll notice that if UPS and FedEx start doing well, that means the market is actually essentially recovering from that point. And considering that the rates haven't moved yet, not expecting anything to change there, expecting it to be even worse again. Same with Home Depot and a lot of these other market pulses. Essentially, value stocks give you good information about what is essentially to come in the next earnings cycle. Then you have Tesla. Obviously, Tesla is doing bad because of the EVs, and that whole, not just the auto industry in itself is bad in general. but EVs are doing even really bad. But yeah, again, Tesla is still the best selling electric vehicle in China and in Europe and in the United States. So again, you can say what you want about it, but it's a tech company, and the services have really been picking up. They still have the best supercharging station across the globe. And again, a lot of that's a service they can sell is there. And then they have, again, robo taxis, which we'll hear in August more about that. What's going on that they reduced only $99 a month, and your first month is free. Again, once robo taxis, that's something that's not hasn't even considered for their FSD. Um, and when that will roll out, we don't know when exactly that's going to happen. There could be a lot of problems, especially when you're talking state to state and stuff like that. But when you have a lot of uncertainty and things are struggling, that's when innovation takes over. And you have to understand that a lot of these things you don't think are going to occur for years, when people are struggling so bad, that's when technology takes over. And that's what we're going to see with AI. Now, AI still has a long ways to go. It's useful. It's a useful tool, but it's still not replacing everybody. Right? If you have a high level of education, and not just talking about a college, about things that require a lot of education, right? Like AIs aren't close to that. Now, in 5 years, you can start challenging that, but again, you're more close to probably about a decade. But again, depending on how quick, you have to also understand that these models are learning much faster. But then you are constrained by energy, you're constrained by supply to be able to get it there. So you have to keep those things in mind. But Tesla, again, will be really interesting to see what happens in that conference call. If the big things that people are watching there is turnaround on profitability, or they are profitable, but turning around on numbers and what they are looking for in the future. Again, humanoids is a big one I'm betting on. And again, they're the perfect company, public traded company, that could position themselves to, again, have that big jump forward like they did in EVs with humanoids. I think that will start kicking off in the next year or so. And can really massively put Tesla back ahead of everybody again before too long. And then you also have Visa, which is going to be important to watch to see where they stand. Again, all their forward guidance is really important to watch and see, especially because of delinquencies, and to kind of get a gauge on the consumer there. Wednesday, yeah, Boeing, again, big value play. It's been sinking because it's a horrible company. Again, I don't know why it was at $200. It should be a $5 stock, but it's backed by the government, so that's why it's currently seeing where it's at. But it's a big value play, so you have to keep that in mind. So it's a good gauge to determine where value is. Starts selling off, it's definitely a bad sign, especially if financials continue to sell off. Those lead essentially the market in general, and then tech kind of really overemphasizes the move, just depending on those. So, and then you have Meta, which has been doing incredible lately. Where they're going, and just that they're a marketing machine is what Meta is. And they tap into AI and everything else, so it'll be really interesting to watch to see what they do. Again, they went from an $80 stock to a $500 stock in a matter of a couple of months. So they've had some of the biggest growth over the past couple of months, probably even more. It's very comparable to what Nvda had. Probably not as great, because obviously AI is an infrastructure is going to be it's going to grow quite substantially over the next year or two, until you start getting constrained on supply, and then that will essentially start dialing back in probably about 2 years, and then it'll be more so what the companies themselves and the use cases themselves are put out there. So that's why you have to watch that. And then on Thursday, you have Microsoft and Google reporting again. Them cloud computing is going to be huge. AI is going to be huge for those. So those will probably be some big ones. You're kind of starting off with some weakness in UPS, Tesla, Visa, Boeing, and then kind of finish it off with some strong potential industry leaders in Meta, Microsoft, and Google. This is why I talk about strategic planning. So you got a good mix of potential bad earnings, pulse of the market earnings compared to some industry leaders with AI and cloud computing right now, as everybody's heavily dependent on technology right now to pull us through this. And again, if AI can catch up, then so a lot of this crazy spending the production for it could easily be caught up with AI and robotics. But again, I think you're still about a year or two before that's even plausible. So again, like the government always does, they spend way more in assuming that it's going to get there in a short amount of time. And that's why they're also trying to help like IBM and Intel and grow their whole space as well. So expected moves last week, SPX was over 101. It's still very high at 96. Again, you have to keep on average. This is roughly around 65. So we're still very high. Tesla is very high. Obviously, it has earnings. So playing any kind of Tesla spots going into Tuesday is probably not a good idea unless it's early Monday morning. And playing right up to the bell overnight, it's better to wait to play Tesla from like Wednesday forward on any kind of continuation play, because then essentially those options are kind of diluted and placed back to normal at a normal rate compared to the 15 point moves. So we'll see how that does. Boeing very high at 10. Again, that's typically around like 7. It doesn't move very much. So the fact that it's up to 10, again, it reports this week. So they're pricing in more there. Morgan Stanley or JP Morgan is finally back to normal at 4, which is a typical move for JPM, which that was up at 10 just about a week ago when it reported earnings. So with that being said, let's go ahead and start taking a look at the charts here now. As you can see, the market has not been so hot lately. But one thing to keep in mind, I have marked some of these. Again, I have the 20 daily. I have the 20 and 50 on the weekly on here, 200. So we're at a very key level this week right now. And something I've always stated, typically what happens is, you'll get a pretty decent bounce off the 20. Considering we're hitting a very big weekly support here, we might actually get a pretty decent bounce off of this week. We'll see if we could attempt to make it back to the 50, the 520 mark. Otherwise, if we continue to just break support and just dribble through, that'd be concerning, because if we open up below roughly around this this 49.69, that could be a worry concern, because you don't really have any like strong support until you start getting around that 4,700 mark. Now again, when you start getting closer to these 200 daily marks, you won't hit exactly that mark. If you do, that means that the market is just, there's a lot of fear in the market right now. We aren't at extreme fear, but we're at fear. So keep that in mind. So the market could technically pivot at any point. That's why I've been buying the dip on a lot of these. Have already been sinking off because we don't know if that price cut's going to come in or what new fear is going to come. So again, to try to not weigh too heavy to the bear side or the bull side. Technically right now, the bears have the advantage, and this is the time you typically buy for the next bullish push. So just keep that in mind. We've already sold off quite substantially from all-time high. We've already pulled back roughly about 6% so far. We'll see how much further we can go. Again, I wouldn't be surprised if we do find ourselves down here at the 47. That would be a healthy pullback, in my opinion. That would essentially put us, let me see here. If we pull down to this way, that was about a 10%, 11% correction, which would be a good healthy pullback. I could see us continuing a bull run to the back half of the year if we can sustain this over the next couple months. So again, I think June, July, when you start talking about like second quarter, essentially earnings, the second quarter earnings cycle is going to be very worrisome, considering the massive amount of layoffs that we're currently getting. So that's what I'm really watching to see what plays out there, because if the earnings are still really bad and we're forced to have to start cutting, that can introduce a narrative that no, things aren't strong and resilient. We know they're not, but when that narrative changes that they are not, and that things are in a very bad state and we have to actually take multiple action, which I think just our current environment with the bank term funding program ending. You got a lot of mid to small banks that are struggling to try to keep up with everything. And depending on how quick they start going under, could change that narrative to where we have to start cutting, not because the Fed don't want to cut, but because we don't have an option. And so I think that's, again, that scenario can drop at any time. You have to be aware that that's the case. So you have to, if you're going to take a bullish position, you have to make sure whatever bull position you're taking is in a stock that, one, is has a very bright future, and number two, can sustain itself over the next couple months, especially because it's going to get pretty bleak over the next couple months, as the Fed are going to attempt to try to push us out till next year, as again, data is suggesting that things are strong and resilient, and so they feel that they can hold these rates currently at the where they're at for another year. And so again, if we can make it past the summertime, which inflation should start rising even more, which the next two inflation reports will be very important. If they start rising even more, you could potentially strike more fear into the market. So again, those will be very important. And again, this narrative can continue to feed fear into the market. And so again, I could see that we could potentially get down to the 47, depending on how the earnings does, depending on how inflation does over the next month. Again, going to be extremely important. And then from that point, we'll really be able to determine where the market will go for the next back half of the year. Again, the norm of the back half of the year is typically a bullish part of the year. We're also getting into, again, election time period. So you do have to keep that in mind as well. So there's a lot currently going on that you have to be very mindful of. But again, if we could make it out of the summertime with no huge fear, again, pulling back to 4,700 isn't huge fear. That's just a healthy pullback, in my opinion, that is necessary. And I think we can continue the bull run, or this bullish push, into next year. And then again, at some point, you're going to be facing that fear of a recession being priced in. Again, we could have rolling recessions, which could help. Again, tech and bonds took one heck of a hit back in 2022. And as of right now, I'm not really certain on how much further down we can go from this point. Again, considering that we've had rolling recessions, and a lot of small businesses right now have just really taken a heavy hit. So we'll continue to watch and see what it is. But again, you don't want to get too caught up in the narrative and not pay attention to the chart. This is why it's good to know both, know what the current schedule is and what could potentially sway this. But as of right now, if we break this level, I'm aiming for that 4,700. It's not saying we'll hit it exactly. We could come pretty close. We could hit the 4,800 and pivot. But again, just keep in mind, this thing's already sold off pretty good. Watching for one more strong leg down, and then again, depending on the sentiment of the market, when we get that next strong leg down, we'll kind of dictate if we go up or down from that point. So that's what I'm watching. And then let's get into Bitcoin. Bitcoin just had a halving. Again, the next 6 months, we'll start seeing another big bull market. So towards, again, the back half of the year is when it's typically bullish. I think in the fall, we're still going to start have that massive breakout for Bitcoin around, again, March period next year will probably be a really strong bullish market in crypto. And typically, again, the market itself kind of just is neutral from that point. That's when crypto kind of really takes off anyway. So we'll see if that's the case this year. As of right now, it's currently holding the 62. Wouldn't be surprised if this thing drops back down to I think the big support here is roughly around the 46. That's the 200 daily. So I could see a pullback to that if we get any kind of random fear, and then potentially leading into the next massive bull run. I do believe there'll be a massive bull run. I do believe the printers will be turned back on. So just keep that in mind as potentially could play out. Gold still holding very strong, making all-time highs. Again, very scared about currencies and all that stuff. Again, the same scenario plays every cycle. But even despite all the worries and concern, people aren't going to take gold over the dollar right now. People will still want to take the dollar over gold right now. It's just easier to transport. More people are going to accept the dollar compared to gold. These are just things you have to keep in mind, even with crypto. And it's hard to see how crypto can take over because it's, again, the narrative is being steered that there's a lot of worry and concern about what's going on with crypto, and that it's the whole narrative around it in general. So again, not anybody on the street's going to trade you a dollar for a Bitcoin, right? They don't care, and the narrative is still out there that, again, uh, well, I'd rather have a dollar over crypto because of X, Y, and Z, right? So you have to understand the dollar is still very well ingrained in a lot of things, and it's pretty much still the petrodollar. And so that is still driving the narrative, although BRICS is trying to change that. But again, who is going to get off of the dollar with essentially, even despite everything with what's going on with the U.S., people aren't going to be backed by Putin at this point, right? And so people are still very worried and concerned about Putin. And that why would they want to switch on to something else that is essentially backed by him and not by the U.S. government? Because it's the least of both fears, right? The least of two evils, right? So with that being said, we'll continue to watch and see what happens there. But again, it's always the same song and dance. It never really changes. So with that being said, Tesla, again, it's taking a beating. You look at the daily, we broke this wedge, and now we're just continuing to sell off. So I want to keep this wedge here, this first wedge anyway, that we broke, because this may be a strong resistance as we are starting to sell off. We're starting to break this daily down here too. We can see this better on the weekly here, as we've had strong support here. This week is really going to determine what happens with Tesla and right on earnings. So if Tesla can hold this 155 this week, that'd be fantastic. I think you could, if we can get a surprise, if Tesla can somehow surprise on Tuesday, this thing could really rocket back up and potentially keep it back in this wedge for a bigger move up. Otherwise, we could just potentially break and then continue to chop around this level here and then potentially break out. But we'll see. Again, patterns haven't been the greatest over the past 2-3 years. The more people have gotten in the market, people use patterns all the time. You have to understand the algos are aware of your patterns. That's why you supply and demand, because it works way better than what any pattern has done. And understand that patterns accuracy has gotten worse over the years because of algorithms and then people learning the markets. And so again, the market is trying to keep its edge on you at all times. And so again, this is why supply and demand works, and those zones kind of change a little bit, but they are a lot more accurate than any pattern that I've seen in the market in a long time. So again, very critical level here. If we can break back up, I think Tesla again can chop its way potentially back up to the 225. And then again, if we touch that top layer, this thing may just continue to wind in here for a while and then potentially break out towards the back half of the year. So we'll see here. But again, very big day for Tesla in the following week. Palantir finally gets some selling. I'm really trying to get this thing down. There's some major support further down here around the $15 mark. Anything below roughly around here, if you can get it around 17 and below, I think would be fantastic. Again, it's got probably the best use case for AI on the current market right now. We'll see how it does in the future. Again, Wall Street thought it was a $5 stock not that long ago, so just keep that in mind too. They might try to blast this thing down even further, but really watching that 15 mark moving forward here. And then Nvda again had a horrible day on Friday, huge red candle. Really looking for support roughly around the 640 here. If we could really get it back below in the 500, I think if it gets here, it's going to be short-lived. But definitely one I think you want to keep an eye on, because I do believe in the next year and a half, Nvidia is still, I think, going to outperform a lot of people, at least for the next year. And then from that point, once infrastructure is all built out, then it's going to be heavily reliant on your Teslas, your Googles, your Microsoft, any AI component that has a good use case. Again, I think Nvidia again will offload all that the demand and that the spike that we're currently seeing into those companies. So again, but I still feel it's got a very explosive. I'm just trying to wait for it to get down to some of these zones, potentially grab some shares myself and moving forward for the next year. So keeping that on watch, but those are some of the big key supports I'm watching coming up. And then let's take a look at PayPal. PayPal is another big one I'm still really watching closely. I really would like it back down here at the 58. I would love it around the 50. Again, it's already been selling off quite heavily. I think in the next quarter or two, this one's really going to be doing quite tremendously. It reports on this week as well, and not next week. So yeah, one more week before it reports. If we can get a pullback into this 58, I'll probably take another position here in PayPal, as I do believe it's going to be short term. I think it's going to be doing very well and continue to push up. But again, the consumer's in bad spots. So you have to keep that in mind as well. But I think it's still a great company that's very undervalued at this point, and continue to watch that. But again, trapped in between these two zones as of right now. So we'll see how that continues to play out. Let's look at Boeing. Boeing again, doing horribly bad. Always more bad and bad news. Again, I'm so surprised this thing is still at 167. Expecting it to actually get down to the 126 here, as they got earnings coming out. Stock is very weird. Even they always have like horrible earnings, and they sell off, and then it gets bought up, and just keeps going back up. So maybe this week we'll see how well this does. If it really starts selling heavy, we'll see if we can reach this 121 here. And again, backed by the government. So again, it doesn't last long when it goes down all the way. So we'll continue to watch that. But right now it's kind of at a big support here at the 163. So it needs to hold this week. Otherwise, this thing, again, if it breaks here, it's going to come all the way down to the 126. Not saying it's going to happen in a day. Earnings can produce results like that, but we'll see, depending on how bad it is. It's already had some horrifically horrible news. For some reason, it's still holding. Now they're trying to come out with a car by 2030, so watch out for that car if you want a death wish. But nonetheless, let's look at JPM. JPM currently found some support roughly around here, the 176. Looking for this thing, even though it retested, to continue some selling. Again, I think this thing could at least get down at least 170. For the bulls, you would like it 170 would be good. 156 would be better, depending on what's all going on with the market. But we'll continue to watch this one. But right now, our current top is the 200. So again, this video has gone way over than anticipated. So there's a lot going on this week. There'll be a lot going on next week. So keep that in mind. But aside from that, if you made it this far, let me know what you're getting into this week. What's your thoughts and ideas? Leave those in the comments below. Go ahead and drop a thumbs up if you made it this far. I do appreciate you. And I will see you guys on the next one.